Hello, we are Group C. Today, we will introduce GreenEnergy, a rapidly expanding renewable energy company. It recently acquired a new wind turbine worth 5 million, and this is a major addition to the company's renewable energy assets. It's important that it is recorded accurately in the financial statements. Proper accounting not only ensures compliance with ASB 116, but also provides stakeholders with clear and reliable insight into the company's long-term investments. In today's presentation, we will walk through the five key areas: initial recognition, depreciation calculation, revaluation model, impairment indicators, and disclosure requirements. Let's start with the initial recognition first. Under ASB 116, an item of PPE must be recognized as an asset when two conditions are met. The first one is it is probable that future economic benefits associated with the item will flow to the entity, and the second one is the cost can be measured reliably. Once recognition criteria are met, the standard states that the asset must be initially measured at cost. According to ASB 116, the cost of an item of PPE includes its purchase price, any cost directly attributable to bring the asset to the location and condition necessary for it to operate as intended, and the initial estimate of any dismantling or restoration obligations. Specifically, the purchase price is the basic cost of the asset, and the entity should remeasure the transferred assets to their fair values as at the acquisition date. The directly attributable costs refer to the costs that are capitalized into the cost of the asset. The costs incurred before the asset is used should be included, such as the cost of set preparation, initial delivery, and handling costs, which are listed below. For the cost of opening a new facility, conducting business in a new location, and the cost of introducing a new product or service should be written off to an expense instead of being included in the costs. Finally, at the date the asset is initially recognized, an entity is required to estimate any cost necessary to eventually dismantle and remove an asset and restore the set. Applying these requirements to GreenEnergy, the wind turbine must be recognized at its total acquisition cost. In this case, the purchase price, the transportation cost, and installation expenses all qualify as directly attributable costs under the standard. Therefore, these form the turbine's initial carrying amount of 5 million, which will be recorded as the asset's initial cost under ASB 116.
Hi everyone. So I'll be explaining on how the company will calculate their depreciation for the wind turbine. So the wind turbine was acquired for $5 million, and the company expects to recover for around $500,000 at the end of its useful life. And the estimated useful life is about 20 years. And with the straight line method, we assume that the asset provides equal benefit across each year, so the cost is spread evenly across the life. And the formula to calculate this depreciation expense is very straightforward. So we take the cost of $5 million minus its residual value of $500,000 divided by the useful life of 20 years. So in this case, the turbine will be depreciating at a consistent rate of $225,000 every year. So in each year, this $225,000 will be recognized as a depreciation expense in the income statement. At the same time, the accumulated depreciation will also be increasing on the balance sheet, and it reduces the carrying amount of the wind turbine over time. The asset will also continue to depreciate until it reaches the estimated residual value. So moving on to the next slide. Sorry. And moving on to the next slide. So under ASB 116, the company should also frequently review the useful life and the residual value of the asset every year. So just in case if technology changes, or if the turbine wears faster or slower than expected, the depreciation may also need to be readjusted as well. And depreciation should also only be starting when the asset is available for use. And in other words, when the asset is installed installed, tested, and is ready to operate. So thank you so much. Right now, Yeshi will be taking over to talk about the revaluation model. Thank you.
Good evening. I'm here to present my part, that is advantages and disadvantages of using the revolution model for the wind turbine. My friend's first presenter has already, I think, presented the costs that are included in initial recognition of the wind turbines under AESB 116, and the second presenter has also presented on what should and how should the GreenEnergy Limited calculate the annual depreciation expenses for the wind turbine using the straight line method. So I'll be presenting the advantages and disadvantages of using the revolution method for the wind turbine. So other advantages, since you present the wind turbines at the current fair value, this will give you some more relevant information when asset value changes over time. And second, you can improve the strength of balance sheet when the fair value increases because the surplus goes to equity. And the third advantages can be you can reduce the risk of understated asset values in long useful life assets. And if I talk about the disadvantages of the revolution model, firstly, you incur ongoing valuation costs. So fair value must be updated often to keep carrying amount close to the market values. And number two, your face volatility is equity. So in revolution movements increases, if revolution movements increases or decreases reserves, and it can cause changes to the final position from year to year. And number three, you increase complexity in your reporting. So when you do that, you must track revolution increments, decreasement, and related depreciations and adjustment throughout the year, which is a disadvantages. So I'm done with my part of presentation. That's the advantages and disadvantages. The next presenter will present on what are some potential indicators of impairment that GreenEnergy Limited should monitor for the wind turbine. Thank you.
Hello, it's Jiahang. In this section, I will explain how Green Energy Company should conduct impairment testing for its wind turbine for the ASB 136. And set is impaired when its carrying amount is higher than the recoverable amount. The recoverable amount is the higher of the fair value less cost of disposal and the value in use. Fair value less cost of disposal reflects the amount the company could obtain from selling the turbine, and the value in use is the discounted value of the future cash flows generated by the turbine. According to the case, GreenEnergy performs avenue impairment testing. The turbine may be tested as a single asset or as a part of cash generating unit, depending on how the cash inflows are monitored. And GreenEnergy should follow 5 steps under ASB 136 to conduct the test. Step 1 is to identify the unit being tested, either the individual turbine or as a larger CGU, such as a wind farm. Step 2 is to estimate the fair value less cost of the disposal using market evidence, recent sales of the similar turbines, or independent valuations. Step 3 is to estimate the value in use. Using discounted cash flow projections, the key assumptions include expected power output, forecasted electricity price, operating and maintenance costs, and the appropriate discount rate reflecting renewable energy risk. Step 4 is to compare the recoverable amount with the carrying amount under ASB 11.6. If the carrying amount is higher, the impairment loss is required. Step 5 is to recognize the impairment loss. Under the loss model, loss is recorded in profit or loss. Under the revaluation model, it's treated as the revaluation decrease, reducing any revaluation surplus related to the turbine before affecting profit or loss. And GreenEnergy must also monitor impairment indicators. External indicators include the following: electricity price, changing renewable energy or regulations, and the declines in market valuation for comparable turbines. Internal indicators include lower than expected energy output, major mechanical failures, higher repair cost, and downward revision to cash flow forecast. When these indicators appear, a detailed impairment test is required to ensure that the turbine is not carried above the amount recoverable through use or sale.
Hello everyone, my name is Usman Shabbir and I will be explaining the disclosure requirements under Australian Accounting Standard 116 for green energy wind turbine. Under AASB 116, Green Energy Limited must provide several key disclosures for property, plant and equipment. These disclosures help users for the financial statements understand how the asset is measured, depreciated, and how its value changes over time. First, the company must disclose the measurement basis used. This means stating whether the one turbine is recorded using the cost model or the revaluation model. If the revaluation model is used, the company must also disclose the date of revaluation, the fair value measurement method, and whether an independent valuer was involved. Second, AASB 116 requires disclosures of depreciation details for the wind turbine. This includes the depreciation method, in this case straight line, the useful life of 20 years, and the residual value of $500,000. Third, the company must disclose the impact of any revaluation movement. A revaluation increase goes to equity through other comprehensive income. A decrease that affect profit and loss must also be disclosed. Fourth, the standards requires disclosures of any impairment indicators and impairment losses. If the recoverable amount falls below the carrying amount for a wind turbine, this may involve factors such as change in wind pattern, electricity prices, or operational efficiency. Finally, AASB requires a reconciliation schedule of the asset's carrying amount from the beginning to the end of the reporting period. This means Green Energy Limited must disclose opening balances, additions, depreciation, revaluation adjustments, impairment losses, and closing balance. These disclosures ensure transparency and help stakeholders understand the financial impact of the wind turbine on the basis. To summarize the entire case study, Green Energy Limited initially recognized the wind turbine at a total cost of $500,000, including all directly attributed costs, then depreciation, and after that, company also has the option to use a revaluation model. Every year, the company must also consider impairment testing. Finally, AASB 116 requires full disclosures of measurement basis, depreciation policies, revaluations, impairments, and movements in carrying amount. These disclosures promote reliability, transparency, and compliance with accounting standards. Overall, these requirements mm, help ensure Energy Limited presents accurate and reliable financial information to its stakeholders. Thank you.